Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because the global liquidity index continues to put in new highs, and this should act as a strong tailwind for Bitcoin. And I can't believe how many people are still overcomplicating this, even though it has worked out so well for us this entire cycle. In the beginning of the cycle, when we had the first major global liquidity uptrend, everyone was saying there was no way Bitcoin could follow because FTX had just collapsed and DCG was going under next, and Bitcoin had to go to 12,000 before bottoming. In early 2024, we kept talking about the global liquidity uptrend, but everybody was saying there was no way Bitcoin could follow because grayscale unlocks were going to dump hundreds of thousands of Bitcoin on the market and price had to go back to 20K. As recent as late 2024, we were talking about the global liquidity uptrend and that Bitcoin would likely follow, but everybody was saying there was no way that could happen because the Japanese yen carry trade was collapsing and the global world order was falling apart right before our eyes. And even as recent as April of this year, we kept talking about how bullish this global liquidity uptrend was, but everybody was saying it no longer mattered because of what was happening with tariffs, and the entire global economy was about to collapse and go under because these tariffs were going to ruin everything. So how on earth could Bitcoin rally? And we find ourselves today with the largest global liquidity uptrend of the cycle, Bitcoin putting in a bull flag after a very impressive rally off that April bottom. And instead of expecting continuation like you would after a bull flag, I see so many people saying there's no way we're going to rally. Don't you know that Q3 has to be a bearish quarter because it tends to be in the past, and there's no way we're going to see Bitcoin put in new highs in July. And I believe that thesis is going to be completely wrong. And the more likely scenario is that Bitcoin is going to follow this global liquidity uptrend and rally higher. And this is exactly why Monday's free weekly report that I always link in the video description was called Ready for Takeoff, because we have the US dollar index continuing to go down. And if the global reserve currency is getting devalued against all other currencies, that increases liquidity globally and makes it a lot easier to pay back US dollar denominated debt. And this is something that many people like Lynn Alden have been talking about for a while. We're not really seeing the dollar acting as a flight to safety trade anymore, and the dollar is now at the lowest level it has been in 3 years, while Bitcoin is over here approaching new highs and getting ready to break out. And things look even more optimistic when you zoom out a little bit more and compare this global liquidity index cycle to the previous two, and how we just experienced a macro breakout on the global liquidity index recently. And now I know a lot of people like to ignore this chart because they point out the fact that Bitcoin has topped first historically. So maybe Bitcoin is the one leading the way and it's the one forecasting what's going to happen in the future, because markets are forward looking. But what that thesis completely ignores is Bitcoin's price action going into those major blow off tops, and how investors just end up sitting on so much unrealized profits that they start selling Bitcoin no matter what the macro environment is and no matter what the global liquidity index is doing. And it makes sense that when the parabola gets so out of hand, the bubble eventually pops and then we see global liquidity top soon after. But what you'll notice is very different about Bitcoin this cycle so far is, instead of seeing these very steep parabolas that end up collapsing on themselves, so far this has been a very slow and steady structured uptrend where Bitcoin rallies, consolidates, rallies some more, consolidates, rallies, consolidates, rallies, consolidates, and it never really has gotten ahead of itself to where we have that bubble risk of sellers stepping in aggressively because price has gone up too high too quickly. And of course, if you'd like access to everything I use in a more structured way, like my portfolio automation system, all my TradingView chart templates, my entire portfolio outside of just crypto, and mental models I use to navigate this market, you can check out the early bird pricing on the Crypto Enjoyers program while I finish up this final module for the mental models course. But it's becoming very clear here that the market is starting to price in these rate cuts that are expected. Right now, it's likely we're not going to see a rate cut in July. There's only a 20% chance. But once July is behind us, we're expecting a rate cut in September, another one in October, and another one in December of this year. And markets are patient enough to look forward a few months and start buying in anticipation of those rate cuts today. So I do believe this should be a strong tailwind for global liquidity and risk assets like Bitcoin and the S&P 500 as a result. This should also mean that the Fed should stop quantitative tightening any moment now. It has slowed down aggressively compared to what it used to be, and it's only a matter of time before they pause it, which markets should like quite a bit because I think the Fed is going to keep facing more and more pressure as this unemployment rate slowly ticks higher. We do have a print coming up this Friday, and the expectation is 4.3%. We've been at 4.2% and flat for almost a year now. And I think that gave the Fed an excuse that maybe they didn't have to step in immediately. But if we do get that 4.3 print and see the unemployment rate go back into an uptrend, I think the Fed is going to have to start easing, especially if we look at where inflation is compared to where it was previously. Yes, it's still not back at their target, but they can't ignore the labor market weakness forever. And we also know that growth is still positive, so there's no recession panic as of right now. We find ourselves in a very happy medium where growth is still positive, but things are weakening enough to where the Fed is going to be forced to cut. And I do think risk assets know this because we just saw a new all-time high for the S&P 500 just last week, when just 2 months ago, everybody was panicking and freaking out, saying we were entering recession because of tariffs and because it was all over. And now here we are just 2.5 months later, the S&P 500 has made new highs, and that usually means that Bitcoin will be following quite shortly. And this is why my base case is still that Bitcoin is going to put in an imminent rally into price discovery within the next week or two. We saw an incredible move off of the April low, which we were expecting and talking about throughout the entire tariff situation. This, as of right now, looks like a bull flag and like consolidation, just prepping for the next move higher. And we're entering into what is usually a pretty decent month for Bitcoin in July, which usually has a return of 8 to 10%. And usually June is quite flat, and that is what we saw this year. So coming off of a flat June, I do think we are going to see a solid July and potentially even a solid August. I know many people assume that August has to be bad, but funny enough, if you look at post-halving years in the past, like 2021, like 2017, and like 2013, August in each of those post-halving years was actually very solid and really the only good August Bitcoin has had in its history. So if we really do break out here and build up some momentum, I wouldn't be shocked if we saw a rally into July and August and then topping out somewhere there and going down in September. Standard Chartered seems to agree because they're expecting Bitcoin to hit new highs of 135K in Q3 because of narratives we talk about all the time, like strong ETF inflows and corporate buying. And it's incredible that sentiment is still neutral. But honestly, if I take a look at my comments section and what people are saying on platforms like Twitter, right now, many people are bearish. Many people are giving up hope and expecting a painful, choppy summer. And it's incredible that we're still in neutral on the fear and greed index as Bitcoin is just under 109,000, hugging the previous all-time high and looking prepared for a breakout. And if you don't want to rely on the fear and greed index for sentiment, we can look at the Bitcoin futures annualized rolling basis. And this tells you how much of a premium futures investors are paying to be able to long Bitcoin. And right now it is at the lowest level since late 2023, when Bitcoin was trading under 30,000. And we can see over and over again that this rolling basis does tend to bottom and get quite low at Bitcoin local bottoms, which makes sense once a lot of that froth is removed and there's not that many investors betting on upside. That's when Bitcoin finds its bottom, and we're back at the same level we were at during the tariff drama in April, except Bitcoin is about $35,000 higher than it was at that time. So as of right now, it does feel like everything is lining up perfectly for a Bitcoin breakout in the very short term. We saw an incredible move into this bull flag where everybody got blindsided selling the tariff low during all of that panic, and they're still waiting to buy back in the mid 90,000s, or even praying that Bitcoin even goes back to those tariff lows so they can buy back where they sold. But in reality, it looks like this bull flag is just going to lead to continuation in the very short term because the buying and demand still looks quite strong for Bitcoin. Wall Street bought over $1 billion in the Bitcoin ETFs last week. And even though there were some small outflows yesterday, it's still nothing compared to the inflows we've been watching come in day after day for weeks and weeks and weeks now, absorbing all of that supply. And we're seeing more and more announcements of these Bitcoin treasuries and companies raising money to buy Bitcoin and companies issuing shares to buy Bitcoin. And I do think this is going to accelerate before it eventually backfires and pops, but we're probably still quite far away from that happening. We saw an announcement that Bakkt Holdings is filing for a $1 billion shelf offering that could fuel more Bitcoin buys. Genius Group is eyeing massive Bitcoin buys from its billion-dollar lawsuits. Strategy is still buying hundreds of millions of dollars of Bitcoin week after week, and the strategy of Japan Metaplanet continues to buy hundreds of millions of dollars of Bitcoin and pulling that supply off of the market. And again, I do think the same way these Bitcoin treasury companies are going to propel price higher over the next few months, I do think they're also going to exaggerate the downside when many of them are going to be forced to sell. I just keep mentioning this now so it doesn't catch everybody off guard when I do start to talk about it more as things start to accelerate. But I think we have quite a bit of runway before this actually reverses on itself. And with all of this demand coming from ETF buyers and corporate treasuries, I have a hard time seeing Bitcoin being unable to break through this final resistance line at our range high of 109K, especially because we've seen a huge slowdown in long-term holder selling. Interestingly enough, Bitcoin long-term holder supply has increased at a record rate over the past month, and this is a chart that has served us so well over and over again on the channel. We talked about long-term holder selling when Bitcoin was entering its March peak, and we looked at it as a major warning sign that we took profits into. And then at the August low, we talked about how long-term holder selling had significantly slowed down and that Bitcoin was likely going to bottom soon, and we used that to slowly buy the dip. Even as recently as January of this year, we talked about the long-term holder profit taking while everybody was talking about strategic reserve, 500K Bitcoin. There's no way corrections are ever going to happen if the US starts market buying BTC. And then here we are once again with sentiment relatively neutral and a huge slowdown in long-term holder selling as Bitcoin prepares for a huge breakout. And I know this has kind of become a meme, and I don't believe that much in the supply shock narrative because I do think higher prices always bring on new sellers, but it is good to see that we're seeing less and less Bitcoin on exchanges and less Bitcoin at the OTC desks. Now, I'm never going to be one of those people that says that once the OTC desks run out of Bitcoin, price is going to double overnight because there's not going to be any available to get anywhere and you're going to have to pay a 10 times higher price to buy any Bitcoin on the market. But as of right now, we continue to see these balances go down. I do expect them to go up once again eventually when price gets high enough, but the trend is still moving in the right direction, just like the exchange balances trend as well. And although I don't believe in the full supply shock narrative sending price teleporting higher to 500K, I do think it is still a good tailwind to the supply and demand dynamics for Bitcoin. And there we have it, right in the middle of me recording this video. Bitcoin is trading above our range high of 109K. And now I always wait for the weekly close before jumping to any conclusions because the candle could always end up as a wick. But I believe that this breakout will be the real one because of everything I've talked about in this video so far and because of how clean this bull flag consolidation has been. And that brings us to my portfolio. What am I going to be doing taking into account my base case of Bitcoin rallying higher in July and August and everything else I've covered in this video? I'm still incredibly happy with my current positioning, plenty of profits locked in along the way. So I feel very comfortable holding the other 70% into hopefully much higher prices. I'm very happy with Ethereum in the short term as we get those staking ETFs and perhaps more usage with a better regulatory framework. And I think the Solana ETF launch will be quite successful as well, especially because it's going to be getting staking right out of the gate with a 7% yield, which I think a lot of investors will be intrigued by, especially with Bitcoin trading further and further above 100,000. I think more and more investors are going to be tempted to buy Ethereum and some of the other very popular major coins. Ethereum was able to reclaim its 200-week moving average after that brief shakeout last week and the week before that, and it looks like it will be reclaiming 2,800 in the very near future, which should make a lot of you quite happy because usually major rallies from Ethereum are what trigger alt seasons and give investors a lot of capital to rotate into riskier projects. I'm not going to try to jump ahead of it. I would rather see it play out first and then position once things have been a little more de-risked. But it's hard not to be bullish looking at Ethereum Bitcoin putting in a higher low over the past 2 weeks while Bitcoin has been consolidating. Solana looks quite decent as well with its higher low, just needs to reclaim that range mid, and perhaps ETFs could be the perfect catalyst. I believe the first staking ETF for Solana was supposed to launch today, but I want to wait and see all of the other more popular issuers launch their ETFs first. And it looks like there's now a 95% chance that other projects like XRP and Litecoin will be receiving ETFs as well. And those launches this summer in hopefully July and August could be an additional tailwind to the market alongside that historical seasonality. And Sol Bitcoin has reclaimed back above those December 2023 lows. So hopefully it's able to maintain that momentum. And I believe we are overdue for some good performance from some of the major altcoins that have underperformed Bitcoin for the entirety of this cycle. As I've made it clear in this video, the short to medium term is quite optimistic in my opinion, but if we even look out at the longer term, the federal government is still running huge deficits. That deficit trend continues to worsen. Exponential debt growth means exponential money supply growth and currency devaluation, which should be bullish for our risk assets like the S&P 500 and bullish for our fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.